Welcome back to Return My Capital. Today we're looking at four of the leading hotel brands in the world. We'll compare metrics, performance, some of the top brands within these umbrella companies. Let's say the four are Hilton, Marriott, Hyatt, and Wyndham. So starting out here with Hilton, you see over the past year up 9.5%, peaked out around 273 back in February. Now trading in the lower half of the 52-week range, which is let's say 195 up to 275. And you'll see year to date down 10.5%. Over the past 5 years, though, really bounced out of, and you'll see this with all four of these, really bounced out of the pandemic lows when these companies essentially couldn't operate, right? No one was traveling, whether that was for leisure or for business, and room bookings were at, let's say, all-time lows, certainly. So bounced strong out of the bottom seen during the pandemic lows. And you see that here during 2020. Hilton, for example, was down here at $56, now trading up well above 200. Forward price to earnings elevated, certainly elevated, 27.7. There is a dividend. We'll take a look at that, and a 2% short interest on this $55.5 billion operator. Looking at EPS estimates for the next 3 years ending 2027, you see pretty solid EPS expectations of 11.4, 15.9, and 18.6%. Sales growth in the high single digits expected. Valuation, like we talked about briefly, it is extremely elevated. I mean, if shares were to remain flat as they are here and we baked in this growth for the next 3 years, the price to earnings would still be slightly above a 20 out into 2027. So very richly valued on Hilton here, but it is highly profitable. Gross profit margin at 76%, net income margin at 32%. So you got to love that. And the balance sheet is healthy enough on this 53 billion, let's say, market cap company. You've got total debt of 12 billion and cash at 1.3 billion. It does pay a dividend. That yield is just 0.27% on a forward basis, a 60-cent annual payout. And we'll have payout ratio 8.4%. Looking at the dividend growth history here, you see there's really not a whole lot of dividend growth history, right? So paid a dividend from 2015 to 2020, although it certainly was cut heavily from 19 to 20. It was at 60 cents in 2019, where it is today. They cut it by 75% down to 15 cents in 2020, completely eliminated in 2021 during that craziness, reinstated in 2022 at 45 cents, and now it's been flat for the past 2 years at 60 cents, which is exactly where they had the dividend from 2017 to 2019. So that must be what they're comfortable with. But again, that payout ratio is minimal. So hopefully room for future growth to that dividend, just 8.4% on the payout ratio. We'll move on to Marriott here. Past year performance flat, down 0.9%. Year to date, been beaten down 15% over the past 5 years, as we saw with Hilton. Really exploded out of the bottoms during the pandemic. So it's up 171% over the past 5 years and 195% over the past decade. Again, lower half of the 52-week range today, trading at 236, and that range for the full year is 204 up to 307. A little bit more moderately valued, but still elevated. Forward price to earnings of 23.4. Again, does pay a dividend, yielding a little over 1%, about the same short interest of 2%, and a $65 billion market cap here. How does that compare to Hilton? Oh, slightly larger. Hilton, 53 billion, Marriott, 65 billion market cap. We'll compare all of these together here in just a moment. Let me go ahead and refresh this for Marriott. It's not liking loading these charts here. Let's see. There we go. All right, taking a look at EPS growth out for the next 3 years, we're expecting growth of 8.3%, 12.4%, and 13.4%. Sales growth mid-single digits. Again, valuation is elevated, although it is slightly cheaper than Hilton. Profitability, again, is phenomenal. 82% gross profit margin for Marriott and a 36% net income margin. Balance sheet doesn't look as healthy as it did with Hilton, let's say. So on the 65 billion market cap, they do have 15.4 billion in debt and only 400 million in cash. Looking at that dividend, a little over a 1% yield, a $2.52 annual payout. Higher payout ratio than we saw with Hilton, but still very healthy at, let's say, 26%. They've been growing that dividend at a 5.6% rate. But again, you'll see all these companies were so greatly impacted during the pandemic that they were forced to cut that dividend in 2020 and then completely eliminate in 2021 as things were so uncertain and their business was essentially frozen. So we saw great dividend growth back from 2014 to 2019, grew from 77 cents up to $1.85, did cut in 2020 down to 48 cents, eliminate in 2021. Now, coming out of this, we have seen growth, really quite explosive growth, actually. So in 2022, the dividend was reinstated at $1 a share. A year later in 2023 at $1.96, so doubled that dividend up essentially. And then in 2024, another very healthy increase up to $2.41. So with this low payout ratio, we should expect future dividend growth with Marriott as well. Moving along to Hyatt, we see a far smaller company compared to Marriott and Hilton. Probably not a surprise, but that market cap is more along the lines of 11 billion. So about as quarter as large as Hilton and about 20% as large as Marriott. Year to date, been hammered, down 28%, down 26% over the past 1 year. You see the very elevated short interest on Hyatt here at nearly 14%. And over the past 5 years, up 102%. And on the past 10 years, up 90.5%. Trading towards the bottom of the 52-week range. It's at 113 today. The bottom would be 102. The upper end would be 168. Future growth here, you see why there is such an elevated short interest here on Hyatt. EPS growth is expected to be negative 16.5% for 2025 here. So that explains that. But returning to expected growth of 36% on the EPS for 2026 and 28% in 2027. Mid-single digit sales growth expected for each of the next 3 years. Because of the substantial decrease expected for EPS in 2025 here, you see that silly price to earnings ratio of 37, but returning to more normalcy of 27 and 21 expected in 2026 and 2027 respectively, based off of current share price. Profitability, not as great as you saw with Hilton and Marriott, those 70 and 80% gross profit margins. But with Hyatt here, you're seeing 42.5% on the gross profit margin, almost 40% on the net income margin. Balance sheet, again, 11 billion market cap. It does carry a little over 4 billion in total debt and let's say 1.4 billion in cash. You do have a dividend here. There was a recent cut, but currently a little over 0.5% dividend yield, an annual payout of 60 cents. It's kind of the lucky number for some of these hotel providers. I guess that's what we were seeing with Hilton, but just a 17% payout ratio. You see here on the dividend history, 2018, 60 cents, 2019, 76 cents, that cut into 2020. Maybe you're noticing a trend here with all of these companies down to 20 cents. So 76 cents down to 20 cents in 2020. The dividend was completely eliminated in 2021 and 2022, and then was reinstated in 2023 at 45 cents and now back to 60 cents. For whatever reason, these companies love paying 60-cent annualized dividend distributions. We'll move on to the fourth company here and then do some comparison across each of them. Wyndham Hotels, over the past year, up 16%, year to date, down 15%. Over the past 5 years, up 130.5%. And then over the past decade, well, we can't do that because Wyndham in its current structure went public May 14 of 2018. It's a heck of a time to go public for a hotel company right before the pandemic there. Went public at $65, was trading in that range before the spike down to $25 during the pandemic. Excuse me. Trading the cheapest of the four at an 18 forward price to earnings ratio, trading slightly below the middle of that 52-week range. Similar 2% short interest to Hilton and Marriott. There is a dividend here, actually the highest yield of the four at nearly 2%. We'll take a look at that, $1.64 paid annually. And this is also the smallest of the four, market cap of just $6.6 billion. So far smaller, certainly, than Marriott and Hilton. Looking at revenue growth, EPS growth, EPS is expected to grow 10, 14.5, and 14.5% for the next 3 years. Sales growth is actually the highest of the three, at 6, 7, and 8% for the next 3 years. Profitability, a little bit better than Hyatt, a little bit lesser than Hilton and Marriott. So gross profit margin at nearly 68%, net income margin at 20.5%. 6.6 billion on the market cap, 2.5 billion in debt, 100 million in cash. So just all in all, smaller total amounts than the other four. But again, highest paying dividend of the three, almost a 2% yield at 1.93. Payout ratio is the most elevated at 35%. And that 5-year CAGR on the dividend is at, let's say, 5.5%. Kind of interesting to see here with Wyndham. It may make a little bit more sense when we look at the actual individual brands that make up the Wyndham portfolio, a little bit more value brands, but we'll get to that in a moment. But no actual dividend elimination during the pandemic. Certainly a reduction from 2019 of 116 down to 2020 at 56 cents. But ever since 2020, we've seen growth. So 2021, 88 cents, 22, $1.28. 23, $1.40, and then in 2024, $1.52. We'll go ahead and pull up a chart just so we can overlay all of these and actually compare here. So we'll do Wyndham. Let's see. Let me remove some of these out of here. We'll do Hyatt, Marriott, and we'll do Hilton. And just for good measure, we'll overlay all of these. That's okay. So we'll compare these four on the charts. You see over the past 1 year, Wyndham is beating the group at 15.5%. The worst performer would be Hyatt, down 25, almost 26%. So a fair amount of distribution among the four just over the past year. I mean, even year to date, I mean, yeah, golly. Hyatt is just getting crushed. Over the past 3 years, a little bit tighter of a cluster, but again, Wyndham is performing pretty terribly over the past 3 years, down 13%. Hilton leading the group, up 27%. And then over the past 5 years, fairly tight cluster, but Hilton is leading the pack at 170, Marriott at 147, Wyndham at 112, and Hilton at 87%. Now, if we pull this spreadsheet up, again, this overlays the four of them. So you see the ticker symbols there and the market caps, the short interest. Really, the only thing that stands out from a short interest perspective is Hyatt at that nearly 14%, the rest of them at 2%. Price to earnings, we kind of talked about how Hyatt is elevated right now. That's why you see the elevated short interest, but the price to earnings at almost 37. Wyndham, the lowest at 17.7. See the 2024 revenue there, Marriott leading the pack at 6.6 billion, followed by Hilton at 4.8 billion, Hyatt at 3.3 billion, and Wyndham at 1.4. We talked about the EPS growth for the for the next 3 years. So for 2025, Hilton's the highest expected EPS growth. For 26, you see Hyatt really popping there. Actually, for 26 and 27 at 36 and 28% expected. You see the sales growth beneath that. Really, Marriott and Hilton are leading the pack from the gross profit and net income margins. Hyatt is by far the lowest on both of those metrics. You see the balance sheets here. Talked about the dividend yield, covered that pretty well. We talked about the 1, 5, and 10-year performance. We'll wrap things up by talking about some of the individual brands. If you travel, again, for leisure, for vacation, certainly for work, you're going to notice a lot of these brands. And I actually found it interesting, the difference between the portfolios that make up these brands. So for Hilton, You've got Waldorf Astoria, Conrad, LXR. I think those are their luxury brands. Again, this is all for Hilton owned. Then you've got more of the consumer, everyday Joe facing brands, the places I stay. Hampton, Doubletree, Canopy, Embassy Suites, Hilton, Garden Inn, and Homewood Suites. Those may be more their long-term stay type locations. For Marriott, certainly the brands I tend to stay in the most. You've got Westin, Ritz-Carlton. Certainly those would be their luxury brands. You've got Delta, the JW, Marriott, Starwood, Le Méridien, Sheraton, St. Regis, Gaylord, W Hotels, AC Hotels, Fairfield Inn, Spring Hill, Renaissance, Aloft, Bulgari, Courtyard, and Moxie. So that's the some of the brands that make up the Marriott portfolio. Now, Hilton is interesting. Not brands I'm familiar with. It seems that Hilton more so focuses on a lot of, I don't want to say niche brands, um, certainly more locations outside of the United States than the other three. But I'll just list these off. Not places I'm super familiar with, to be honest. But Alula, Andaz, Atona, Breathless, Bunkhouse, Caption, Destination, Dream. These are interesting names. Huh? Trying to paint a picture. Grand Hyatt, and then Hyatt Centric, House, Place, Regency, Select, Studios, Park Hyatt, and the Standard. So again, not super familiar with a lot of their brands, but that's what makes up Hilton, or excuse me, Hyatt. Definitely targeting a different clientele than I would say the other three, especially Wyndham here. So we'll take a look at the Wyndham brands. American, Baymont, Days Inn, Esplendor, Hawthorne Suites, Howard Johnson, the old Hojos, La Quinta, Ramada, Super 8, Travel Lodge, and Wingate. So these are more of the budget-friendly brands. Maybe more the brands that you would see as you're driving on the freeway, and these are posted up next to a sketchy rest stop or something. I don't know. Not to bag on them, but it's certainly obvious what their target audience is, right? So yeah, those are the actual brands that make up these conglomerates of hotels. Hope you enjoyed it. Thanks for watching. If you got something from it, if you enjoyed it, whatever, give me a like, give me a subscribe. Thank you for watching. Take care. Bye bye.